Hey, everybody, welcome to the Tobin Gregory Group Show. Happy Halloween, everyone. We hope everyone's getting treats and not tricks this year. Craig, any plans for Halloween this year, man?
Yeah, the kids going trick or treating, and I'm hoping to raid their candy when they get home.
I know. Do you see those like Jimmy Fallon videos where they trick their kids and say they ate all their candy?
I think that's awesome.
But it'll be online this year, I'm sure. But they're fun to watch because people freak out and they're like, "Oh yeah." Some kids scream and some kids are like, "It's okay." I'm like, "Okay, hopefully my kid's the second kid. I don't know if we'll try it this year or not because I don't want to damage them." But they're always fun to watch. Craig, I know today we're kind of keeping it light. We'll keep it under 15 minutes. That's our promise. If this is your first time here, welcome. We want to touch on some important things today that can help you prepare for a mortgage, look for a mortgage while you're in the process, win the offer on your home. And really, this is unscripted. We don't have any of this planned today, so we're just going to talk through some stuff. And I think it'll be more organic and straightforward, so I'm excited about it. So, Craig, you want to, I guess, talk about prepping for a home first, or where do you want to start?
Yeah, sure. So what you need to do to get ready before you're buying a house, the most important thing besides making sure that you're employed is making sure you have good credit. This is one of the topics that, you could talk for a full day on, but we're going to keep it short here. And as far as credit goes, there's a lot of things out there when it comes to credit. It actually starts when you're really young. Your parents could start something for their children that I didn't even know about until a few years ago, and that's adding a child as an authorized user on a credit card. Now, not every bank or credit card company will report these to the bureaus as trade lines. However, a lot of them do. And if you are 13 years or older, you can be an authorized user on a credit card, which means before you even head off to college or trade school or whatever you do after high school, you could already have established great credit. As most people know, credit is pretty much what runs the world here. If you have good credit, you have the ability to get wealth by buying homes on good credit, buying cars. Pretty much everything relies on good credit. So in order to get good credit, let's say you're an authorized user, maybe you get a credit card from your parents and you start using this credit card and you make sure you pay your bills on time. Contrary to popular belief, good credit doesn't always mean paying off your credit card entirely. Matter of fact, a lot of the bureaus recommend you keep about a 10% balance on there, but you maintain the utilization. So if you have a $1,000 high balance limit for a credit card and you charge $500 a month on it, pay it down to $100 and leave $100 balance on. Make sure you make your payments on time. These are things that will affect and also help you grow credit. Keeping these credit cards open for long periods of time is also good. Don't make a habit of opening up a lot of credit cards and then closing them down and opening them up. I know a lot of these places are intriguing with the free miles and points, and we'll give you this and you get free Omaha steaks or whatever it might be. Don't open and shut it.
Give me that after this.
Don't open and close accounts constantly. What you want to make sure you do is keep longevity, because that'll help establish your credit as well. Yeah. They also do want to, revolving payments are also good things. So if you have revolving and installment payments, if you buy a car, it doesn't always help paying it off early. It helps keeping constant payments to have these installment payments going. And if you show that along with a couple revolving payments like credit cards, then that as a whole is going to be a great credit profile. Also, Credit Karma is a good company for, everyone hears about Credit Karma. Those are not your actual credit scores. Mm-hmm. They use algorithms and things to generate based off credit card utilization, but they don't have your true score. They sometimes could be within a 15 or 20 point radius, but I've seen it as high as 100-point deviation from what your true scores are. So don't believe everything you see there. Additionally, when you're on Experian and you're looking up your FICO scores and things like that, lenders have a different metrics for the FICO scores. There's a whole bunch of different FICO scores. Mm-hmm. So you may see your Experian score and say, oh, I got a 682. And when a lender runs your credit, they may say you have a 652. There's different things that are involved with that. So once again, as Jake and I always say, make sure you talk to an experienced loan officer like us so that we can help you. We can run soft pulls of your credit if you're looking at buying a home, and it won't be a hard inquiry on your credit. And this will tell you what your true lender scores are so that you know what you're looking at when buying a home. But like I was saying, this starts out early. So, you may be someone in college right now watching this podcast. If you're up late at night after a great night out drinking, and you get back home and you're flipping through YouTube and you see, hey, Tobin Gregory Group, what are these guys about? Well, it starts there. In college, you get a credit card, make sure you pay your bills on time. That is extremely important. You don't want to let bills go 30 days past due. It starts building the wrong trajectory for your credit. And honestly, when it comes to a lot of things, I know you always hear the phrase that, you can do 100 great things. The one time you do one bad thing, and that overshadows everything else that was good. Same thing with credit. Pay your bills on time for 10 years. You have one 30-day late payment, and your credit score could go down 50 points. These are blemishes and things you don't want to deal with. So it's important, and we could talk on and on about this for an hour, but we're already approaching our time limit here on what we're supposed to be talking about. And sorry,
let me add a couple things to that real quick, because I know we have another topic to talk about, but the big three that lenders look for when preparing for or actually qualifying for a loan are credit, income, and assets. Right? We spend a lot of time on credit, which I think is appropriate because that's the barrier to entry. Really at 580, we have a chance at approval with an FHA loan. So even if I know you're hearing the 680s and the 700s, credit, you could be approved for a loan at 580. That's your opportunity to start looking for a home. You want to start with the lender. As Craig said, we could do a soft pull, which does not impact your credit. That's a big deal, especially if you're just kind of thinking about it, or you're on the fence, or even if you're looking. I will say there's a lot of credit aggregators out there that watch for credit pulls. They sell your data, and as soon as you have a hard pull, you're going to get 20 calls. I've had a client that's got 30 calls in a day from credit bureaus selling the data, right? Soft pulls keep that from happening. So even if you're thinking about starting out on the journey, a soft pull will avoid that stress that's coming through. A couple big things Craig touched on. Credit mix, which is not just getting a credit card, but having multiple trade lines is going to help your credit, and multiple trade lines in different categories. A credit card is revolving credit. It goes up and down. An installment, like a car payment, is fixed. It's going to be the same payment over time. House payment, the same. It's good to have that mix of credit because that's going to help you build your credit score. So you have the number of trade lines, you have a mix of credit, you have credit utilization, which Craig talked about, where keep that 10% or less on your on the balance of your card, right? We can go into nuances and details and further information about that. We don't want to bore you to sleep. Call us or email us if you have questions there. But those are the big thing, the big three. And when you're in college, or when you have that 13-year-old and you're a parent watching this, think about this. If you add them onto one or two of your trade lines, like a Chase, Discover, City, you want to add them to a card that doesn't have a maxed out balance or late payments, because that's not going to provide the good credit for your child that you would like or want. But you want to add them to a card that you typically keep at 10% or below and has years of credit experience on it. If you do that, mom and dad, your kid can probably go apply for their own car and get it on their own without you having to co-sign and have that on your credit, right? So there's advantages beyond mortgages, but just some things to keep in mind as you're looking to add that authorized user onto a trade line. So it might be appropriate, Craig, for us to talk about, the next couple episodes, that income and the assets. So we have the big three covered for approval, but credit was good to cover today.
Yeah, we could definitely go into income and assets, which brings me to, the Dallas Cowboys. The Dallas Cowboys, they have a lot of income. They have a lot of assets, but that's where it ends. They have crappy credit right now. In the toilet. This team is driving me crazy. Management needs to restructure. Get some people in there. It's every team every week now leading up to the trade deadline is making a move. Even the Ravens, they're bringing on, Deontay Johnson. They don't need him, but, when you're a good team and you're trying to get somewhere, kind of like when you're buying a home, start with credit. You're trying to get to buying a home. The Dallas Cowboys are bankrupt right now. They have the worst credit for me ever. I'm tired of talking about them. But, so then they get blown out, or they lose by 6. They're really getting blown out by San Francisco this week. Enough of them. The Ravens, they lose to the Browns.
Yeah, I know, right? And Washington put a hurting on them.
I don't even understand what's going on in the NFL right now, because every week things are different. Let's talk about a Hail Mary. Jaden Daniels has 13 seconds to release the ball, throws a Hail Mary to beat Chicago because there's an idiot cornerback taunting the fans, doesn't even know the play started. He's doing his own thing. He's already celebrating. Next thing you know, he realizes that, oh, the play's going on behind me. I might want to get involved. And then he tips the ball instead of knocking it down to Noah Brown for the game-winning touchdown. So not only was he stupid for doing what he did, but he made it even worse by helping Washington win after that. I don't understand. Daniels is playing exceptional football right now.
Let's talk about something else that's controversial. New York fans, how you feel about the Mets catch? The fans stripping the ball from the outfielder.
The Yankees. So yeah, congratulations to the Dodgers. I have a lot of family. I'm from New York. A lot of family. I'm a Mets fan. A lot of Yankee fans in my family. From the bottom of my heart, I'm completely sorry you lost. Sorry, Yanks. You are now officially the baseball version of the Dallas Cowboys. You year after year have the payroll, have the people, and you're not winning the pennant. It's been over.
They made it to the series.
Congratulations. You went to the prom. You didn't dance.
Yeah.
So there's no participation trophies in this game. Well, you got 7 plays. You lost. And I'm going to leave it at that, because I know a lot of my friends and family that watch are Yankees fans. Don't want to piss you off. You had a great season, better than the Mets, and I don't care about baseball, as you guys know. Congratulations to the Dodgers. Hockey, real quick. New York Rangers. Of course, I went to the Ranger-Caps game the other night. Caps beat the Rangers down, but wow, what an exciting game. Just reminds me how much I love going to hockey games. It's so great to watch a hockey game live. There's so much action, fighting, checking. I was watching the other day, I was watching women's rugby, and that was the most vicious sport I've watched in a long time. I mean, these people were steamrolling each other. But then you go to a hockey game and you're like, I forgot how physical and rough hockey is.
And it's fast, too. When those guys hit and they're skating, it's different than being able to run and hit someone like we're used to in football.
Best part of hockey, drop the gloves and knock each other out for a few minutes if you have a problem with the other guy. I love that about hockey, because the best part is when that's over with, you get 5 minutes, you cool down, and you're back out again, knocking each other out. So that's why hockey is a great sport. I mean, let them get it out of their system.
It is. Well, guys, thanks for joining us in this episode. Next time, again, we're going to talk about the number 2 of the big 3, which is income, and then we may go into some things not to do while you're also in your under contract to buy a house. So stay tuned for that episode. If you're here, subscribe. If you like what you hear, reach out to us if you have any mortgage-related questions, refinance, purchase. Even if you're in contract, you have questions about what's going on, call us. We're happy to help. Look for some extra links below if you want to build wealth through homeownership. We have something special for you, no cost below, to be able to do that and manage that. I'm Jay Gregory.
Craig Tobin. Happy Halloween, everyone.
Yes, we'll see you guys next time.
Take care.